All right, let's jump into things. Where we at? It is 16th of May and it is 10 to 11. So I first have a quick look at the data that we did get out overnight. It was actually a fairly sort of a heavy set of data in that actually, at least for the US and that, all sort of coming out at once. But all in all, a little bit of a mixed bag. Probably I'd say a bit more skewed to sort of dollar. I don't want to say sort of dollar bearishness, but dollar weak. I would say is definitely more the sort of the outcome of that. So we're seeing PPI and that. But obviously got retail sales as well. So retail sales core was down. Retail sales month on month slightly tick up kind of thing. Again, these numbers are still quite low even if it were to come in slightly above expectation here. The core sales obviously down a little bit. So people, obviously just not spending as much, not a particularly positive look for things. You've also got PPI. Now, this is producer price index, and I sort of go through this every time it comes up anyway, but it's the inflation for the inputs for the producers, basically the manufacturers. And the idea, obviously, if they're seeing more inflation, then that's going to be then factored into costs of goods and all this kind of stuff, and then that'll flow on down to CPI, so the consumer, the end user. This was expected sort of actually, hold on, wait, this was revised. It was revised up. Expectation 0.3 came in at negative 0.4. So this whole sort of idea that all this tariff stuff was going to be driving inflation higher doesn't seem to have sort of played out. Well, not as yet. So obviously, sort of, what I mean. If the inflationary side of things isn't moving up, well, then they're not going to pass that, in theory, not pass that on down to the sort of consumer, which is the CPI, which is what they'd be sort of looking at to sort of go, hey, look, we've got inflation, don't have inflation. So if that price isn't sort of going up, well, then obviously maybe they won't pass it on to them. So that's a tick in the camp of, well, we don't need to sort of cut rates. Um, so one second. Sorry. What was the thing? Yeah, so we don't need to, sorry, raise rates um, as a response, or not necessarily raise, because that's not really on the cards at the moment. But when I say raise, I mean more in the hold higher for longer. Takes away the necessity for sort of cutting it. So they're not obviously sort of not really looking at sort of raising rates at this stage, but the idea of being a bit more hawkish on that kind of stuff. Then had also had unemployment claims, which is smack bang on there. This has been the most uneventful bit of data for a while on that, but it's really just sort of floating around at sort of 20, 30,000 beds. So very stable there actually. And then we had a little bit of excuse me, check myself up with that. We had a bit of manufacturing data out. Again, still on the weak side of things. So, Philly manufacturing that I don't know enough to be able to differentiate to sort of say, okay, look, this is more relating to one than the other. But in terms of the data, both weak, Empire State moving lower, weaker than expected. Philly also still weak because it's still a negative number, but not as bad as expected. But certainly a big jump up from where it was. Negative 26.4. Is this the one that had like sort of a plus 40? Yeah, so these numbers are, it had this a couple of months ago where it was like negative 16 to negative 5, came in at 44. Poof. You know what I mean? So some of these things, they've got the ability to really sort of chop around a fair bit. But as you can see here, negative 26, looking to improve better than they had thought. So, slightly positive there. So a bit of a mixed bag with it all, and it really showed up in the chart because it just didn't really give us a great deal of direction. I would say sort of like, retail sales and the PPI kind of put a bit more in the sort of negative sort of camp, and we saw that on the chart, but it didn't particularly flow through. It wasn't like continued sort of sell off. So it was a bit back and forth and really just a bit choppy with it all. So jump onto the chart. I'll show you. Go start with DXI as he was forgotten yesterday. But if we get onto the lower time frame, you can kind of see, look, they're selling it off this morning. But this is where the data came out yesterday, and there was obviously sort of moving up into it, sold down, and this is obviously sort of, you can't even see this on the 1 hour. You can see through this period, where was it? I think this period hits here. Yeah, 10:30. So this is the candle that it came out with. Obviously, as I said, a little bit more in the sort of dollar bearish, weakish kind of camp. And the chart showed this up as well with the data. Excuse me, with the data. But as you can see, only an hour later, still brought it back up and tried to sort of move up and that. So really, it wasn't a great deal to sort of take away with it. What we can do now is actually sort of have a look here because we can see fairly strong little, inter, uh, intermediate. Geez, I'm not getting my words out very well this morning. This little inside sort of structure, internal structure. I think that's a better word for it there. Um, we can see that the buyers are definitely trying to hold here. This was after the news. It came up, sold it back up. So we've got a pretty clear cut idea of where the buyers are and where the sellers are. So it gives us ourselves a little sort of bit of a breakout box. We can say here, should we sort of see the breakdown, which is at this point is looking like it's certainly wanting to sort of push through here. So very much sort of selling it off from the open. Should it break through here? Well, then you're looking at your sort of 100.3 kind of tests where we sort of saw as this big sort of sell down through here. So it looks like this structure basically, it's tried to come back up and sort of failed. But at the moment, really, this is just consolidating this pullback of the breakout of this channel move here. So look, I'm am in the camp of a stronger US dollar over the next couple of weeks. But certainly it's continuing to sort of like, look like it's about to go and then just failing to produce. And that's what we saw with the data last night as well. I mean, we had this great breakout. It sort of did all the effort to sort of get through here, came back structurally sort of, retested. We gave it credit for that because, it came back, bounced, buyers came in where they needed to. We saw the little sort of shoot up here, but obviously this ran out of steam pretty quickly, and now it just sort of into this little sort of area here. So I think sort of in the immediate, should we come back down here? I don't think this will break straight away. I don't think because I think there's quite large implications if we do break this level here. I think we could potentially look at a bit of a double bottom kind of through this structure here, and then maybe a larger sort of range to come back up. But certainly at the moment, it looks like it's wanting to sort of test down underneath here. So a break underneath, say 160, whatever these supports are just here, we're kind of looking down to 130 for maybe the buyers to sort of step back in there. Alternatively, is it holds this little support that we've seen here. And, there is an idea to this because like the data was bad, but it wasn't like sort of shockingly bad. As I said, you can see that the market sort of chopped around with it a little bit. But we did see sort of gold spring back to life. So that's going to take some strength away from, US dollar buying. Equity markets are still just crazy, so turbocharged at the moment. So you know what I mean. That's also going to garner a little bit of sort of flows of capital. So with these things sort of pumping back up, like gold, I think it was what 31.20, so it's almost $400 off the highs. It came into a big confluence area, and buyers stepped back in, profit taking, whatever. But this is what we sort of say, like, the idea is not to sort of, be wedded to anything of the direction of all. It's just to be able to pick where the flow of capital is going. And we know that the sort of flow of capital, for the last little period has been coming out of gold. Well, US dollar's been seeming quite attractive, but US dollar didn't do a great deal with all that movement. As I said, gold came off, over 10% must be, 10, 15%. And, that's all that US dollar was able to muster. So it still needs to prove itself. And that's why I said I think above this zone over here, above 102, will legitimize this move a little bit more. But as you can see, it sort of keeps trying to go and then fails, tries to go and fails, and does this sort of time and time again. So it does make it difficult to sort of be on the long side of this thing. But this is what it does when it's turning around. We saw it down here. How many times did it sort of look like it was moving up and then it failed? Break some hearts. Looks like it's moving up. I mean, this was a great little run, and then it failed, and it failed again, and it keeps sort of fighting on. So the thing is with US dollar at the moment, it is taking a long time to sort of get up to moving and doing anything, but it is slowly grinding higher. So I think sort of certainly while it's above 100, I think it's still got the ability to disappoint while still moving up, if that sort of makes sense. If we look at how deep some of these pullbacks are, shockingly deep, I'm not sort of writing it off quite yet because I think sort of we'll probably have a little bit of a retest lower on gold to come. I don't think gold bounces fully a bottom, and also the data isn't sort of shocking. If the data was shocking and everyone was talking about Fed cutting, I mean, we've got FOMC next week. Um, and I think that's, oh, sorry, no, it's not FOMC, just all over the place this morning. Just what happens when you don't sleep. We had FOMC, we got RBA next week. Um, the Fed are sort of more sort of looking at that kind of hold thing. And we saw that sort of with what Powell was saying um, last week. Basically, sort of like they're in no rush. And with that, it gives it a bit of an idea that, they don't need to run for the hills. If they were sort of leaning into the whole idea of let's be more dovish and all this kind of stuff, well, I think that'll be the time that we turn. But I think we can get up a bit higher, 103s, before we start to hear that kind of stuff, if that is when it comes. But of course, we'll deal with that as it comes. So in the short term, what can we do? We can look at this little breakout box here. We can see that the buyers are holding this line here. Even as it just came into here, it's tapped up and it's held it. Look, there's not a big strong reaction. I mean, you look at the reaction you saw last night coming from here. That was keen to sort of buy back up into it. At the moment, it's failed to break down. So it is holding this zone here. So as long as this little zone here holds, I'll be looking for a move up to the top side. Maybe to sort of test the 100, call it 101. I mean, it's about a 40-point range through here. But I think this is what's going to give us our direction. If we could break above that level up over here or break below the downside over here. If we do break above, then obviously we're looking at this level just to our left, 101.40. I think that'll be the sort of immediate little target. And then we can sort of see what the market wants to do it from there. But I think, yeah, at the moment, I mean, as of this second, it's failed to break down through here. It's oversold. This is on the 30-minute. What's the hourly? Where we are? So it has ticked onto a new hourly. So look, it's broken the internal structure of this little support that it was sort of trying to close above last night. But still, as we saw, there's quite a large reaction back off this level. This is the 61% of this bounce move. I think you break here, you go down to the bottom. That's fine. I think if you can get back up here above the 101, then we sort of look back up to 101. Is this 101.15? The numbers, 101, 190. Just, I think I need to have another coffee. All right. Anyway, let's rock on. So we got that. We got gold. Gold's these bounces. Geez, wow, they are insane. So a couple of takeaways with this move from yesterday. So we had, if we get rid of the smaller one here, we had a couple of things. We had this little flag structure, which gave us our measured move down at 3,120. I didn't trade this down to the bottom over here, just because sort of I thought, look, I was actually sort of thinking around this 1,060 would hold. It's mainly just the fact that that's quite interesting that this little flag through here sort of pretty much played out to the cent. I was looking around this sort of 3,160 area, mainly just because, previous highs, we had, it was the 38% of the April run. It was, 38% of 2025 run and the 61% move of sort of April's run. But this was the little sort of potential fib that I drew up the other day, sort of saying that, look, it comes down here, watch where the bounce goes to. We've got these levels. We know where the sellers have been sitting previously. We know what it means if they break above this level over here. So if we actually just update this, because obviously it came a little bit deeper, we can see at the moment, 38%, 3,240, it's stalling here. This is still a bearish flow continuation. And in terms of the structure, the bounces come very strong, but we are down, find support, up, find resistance. We kind of still need this leg here. Now, it is possible with this that, this sort of breaks up higher and does some stupid V-shaped recovery because we've seen it with gold. I mean, this kind of move up through here the other day or a week or so ago, it's got the ability at the moment to just go click and just buy like crazy. And there's no technicals in the short term which will really sort of show you what's happening with that. But this was the structure that I was saying I was looking for. Down into this zone here, yeah, it overshot it a little bit. Up, see how hungry the sellers are. Now, it hasn't actually fully sort of committed to the downside here. You'd want to see a bit more of a deep pullback to say, okay, yep, this is internally of this structure, resistance, find support, that kind of thing. So you're still in this one leg of this area here, but as long as it sort of holds underneath, 3,260, I'm looking for this move to come back down here. And this is going to be the important leg because this leg in the larger structure is we've got support, we've got resistance. This is going to give us a higher low, double bottom, or lower low. And that's what I was saying with this sort of analysis through the last couple of days over the weekend, was that, first tap into here, that was bound to see a bounce. I mean, we saw it happen. It's come back up. The bounce, admittedly, is a lot stronger than I sort of thought. But if you look at it closely, though, these kind of moves here, apart from the fact that we've seen some incredible buying with gold recently, these kind of moves here, which are just completely, this is what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then you got one sort of think about it candle at 3 a.m. and then another 4. So, what's that? So like 11 out of 15 candles, and not including these ones down here, all super bullish. This is squeeze stuff. This is not sort of normal buying, though. I mean, I just do need to preface this because we have seen some incredible periods of gold buying. But, when you see these moves in, it's just straight like buy, 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 buy. It's the whole old sort of thing of like, up the stairs, down the escalator. But yes, gold has been doing these stupid pull-ups, stupid buy-ups here that we saw through its run up to 3,500. So it can do it, and that's the thing. You've got to keep that in the back of your mind that there's no sort of like technical to sort of say, oh yeah, it's got to come to this level and come down here. It's just the idea that through structure, it should at some point test how strong the buyers are, because this is like $100 bounce. I think this is like what, $130, 4% straight in one move. So, that's kind of more sort of squeeze, like profit taking slash squeeze material, because it doesn't allow anybody to get off. It's just like, oh, you tried to short it, well, let's push it up more. You tried to short it, well, let's push it up more. So there was a saying that I heard a while ago, and sort of like, with the sorry, alarm's going off, that the bear market rallies. And okay, in the whole context of everything, it's not a bear market, but if you look at it in the context of what we're trading here, which is say this period here, this is moving that direction. So yes, it's bear. So the bear market rallies on this thing are going to come short, sharp, and unrelenting in that. And you can see this here. It's just in a very short amount of time, it's just gone up 5%. It hasn't allowed anybody to get off. You tried to short it here, well, it ripped through. You tried to short it here, well, it ripped through. And it'll do this, boom, 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 and then we'll see the pullback down here. So what I'm interested in is this move back over here. Still 3,160. I think this is a little bit of an overshoot, maybe hit some extra stops and that, down to these points over here. But I think sort of really, with US dollar sort of like looking a little bit sort of tepid up and down, this was obviously a better opportunity overnight as it ran 5% in, one session. If we start to see US dollar sort of hold that zone and try to push up a little bit more, I think you're going to see the profits come back out of gold here. And it's not to sort of say that this is the end all, because this is a very big and very important level for the market to hold. So if it doesn't hold it, that'll be the time that you probably get breakout on US dollar. So because it's such a strong hold here, potentially what we could be sort of seeing through here is a move down here and a bounce up, a move down, bounce up, and just sort of stuff around this area here. I'm not necessarily in the camp of massive breakdowns of gold from here. But in terms of sort of like what we could expect sort of in the short term, I would imagine them probably at least going to come back down and test this sort of like 3,200 level. So when you break these zones, you can see that obviously the buyers were sitting over here. They chopped through it very quickly over here. Oops. Buyers were sitting here. Buyers were sitting here. They gave it up, hit stops, back up through it. I want to see what the buyers do when they come back here. Because, you know, they've held it here, big move up. They held it here for the last hurrah before it went down through. If they hold it here, then you could be potentially looking at, you know, inverted head and shoulders. That could pave the way to go a little bit higher. It could obviously also just work out to a little bit of a range through this area over here. So I think this is the area you need to sort of see underneath sort of 3,200 to confirm that you're going to come down for the bigger tests. But the size of that bounce makes me think, okay, this isn't going away straight away. But in the scheme of things, as I said, from the high that we had, what was this, a week or so ago, coming down to these lows, it's only at the 38%. The sellers have stepped in. You know, this is still in bearish momentum to sort of come down through here. So underneath sort of 31.20 or whatever the lows were overnight, I guess say in Asia, under there, that's where you're going to get your big breakout. And then most likely you're going sub 3,000, another 100, 110 bucks, I'd say, on that trade moving down there because it just flew through that zone. So you know, it's interesting to sort of see how strong this bounce has been. But at the moment, it looks like 38% of that sell down, sellers coming in, having another level. See what happens at 32. Underneath 32, looking back at 31.60, and I think that'll be our early indicator that it's going lower. Technically, you want under those lows because obviously this is where the buyers sort of stepped in. But I think if you're under 32, you're going to be looking a little bit in trouble if you are long on gold. The flip side of this is if we get above 32.70. 32.70, we could see something similar to this, where it was a support, and once it actually broke through, that was its trigger because it was like bearish momentum, held underneath, and was unable to get down there, and then flew up to the top there. But even in this moment here, you can see there's the three steps of it all. Sell down, find support, up, found resistance. Resistance was at a previous support area. Third leg. This is the important leg, and this is the one that came in, gave us a higher low, which gave us an early indicator that we were turning around to then go up higher. At the moment, we're here. We haven't got the pullback to get the higher low to then potentially go higher. I don't think this is just going to squeeze and just run through these levels just in one go. I'd be looking for a move back towards sort of 3,200 and then see what the buyers are doing at that level there. Silver, as I said, I've been on the sideline for silver, and it's just, this is why. These sell downs have been amazing, but every time you think, oh, well, you've got onto it, have you? Bang, buyers come back in like crazy and just storm back up to, up to the top side with it all. So you got to zoom it out just to sort of see what the hell's really going on. And look, as you can see, it is, I mean, overall, it's just sideways consolidating. It's got a very nice sort of horizontal here, but it keeps getting pushed down just a little bit lower, a little bit lower. Buyers allow it through, and then they buy back up. You know, they said under this low, made little low, bought back up. This one's a bit more of a sort of substantial low, bought it back up. I think this is like the last couple of puffs. This is the kind of stuff that sort of, oil is typically known for this. But basically what I sort of think with these sort of things is, it's just destroying people either mentally or financially or both, and then you'll see the move. Because somebody's been trading this thing as it broke this channel. Well, I traded this point here as well, but I at least for this period was smart enough to just sit this one out onto the sideline after it started coming up here repeatedly. But broke the channel, test the underside, lower low, here we go, bang, lower low, bang. It looks all great. It's got the makings of a channel, break, retest, lower low, bang. It should have come down here. What it do? Ripped back up. Found support, ripped back up, boom, boom, boom. It's just ranging. Overall, you can see the sellers are accepting a little bit less. Yes, you had this little spike up here to this horizontal, But all in all, they're accepting a little bit less each time. They're sort of selling it for a little bit lower each time. So you are technically still getting lower lows and lower highs. So it is moving to sort of move down here. But what it's doing is every time somebody gets set, it rips back up and stops them out. Now it'll stop them out. Maybe they go to break even. They had good profit. Bang, they're out for nothing. That's frustrating. It just does your head in. You do it again. Bang, you're out for nothing. Bang, do it again. Bang, out for nothing. Maybe you go in, you take a loss. You bang, you go in, you take a loss after about 5 or 6 trades, you got to go look at, you know what, I can't financially keep hammering this thing and getting kicked in the teeth and being stopped out. You know, it's burnt me out. I can't stand continually trying to get it and get nothing, get this thing, get nothing. And once people are done with that, then we'll see the move. So I'm going to get rid of this price target now because that's a pretty weak looking price target, 30 cents or so under the lows. I think once this thing does break, we're going to see much lower. Let's drag these across here. So we've got our 78%. I would say that due to how long and how much this is sucked out, I think at least back down to sort of mid 29s is probably where we're due for it all. I think this is really just sort of blowing people apart. And as I said, look, oil's very typical for this kind of stuff, where it'll just absolutely destroy and then it'll move. So for now, I'm still sitting on the sidelines. Maybe I'll have a little bit of a short, just a feeler. But as I said, like because it's blown out a bunch of people a bunch of times, mate, it's probably the famous last words, must be getting close. We'll see how this goes. But you know what I mean? Like I think sort of, as I said, it blows people out financially, mentally, then it moves. Well, it's done that a number of times. I'd be more keen to have a shot now than I have been the last couple of sessions, which I've been saying every day. I would just sort of say, look, I'm not getting involved with this because it just does your head in. So I wouldn't be surprised. Maybe I'll have a little bit of a test to short. I think, as I said, look, I think gold's potentially due for another sort of test lower. If it does break, that's going to drag silver with it. Aussie finally, sort of trying to sort of come back down. Now, talking about headaches, this is what a headache looks like on a chart. I've been looking on the downside for a while, actually. All through this area over here, we had that 3 drive up to the top over here. This is great. Caught the little shorts here. Back up into the middle of nowhere, bang down. This one here caught me off guard. I didn't think this was going to come up so high, but the good thing with this, again, we saw this little 3 drive up to the top, and this played out very well. So I've been sort of rocking the short side here. I am still sort of waiting for US dollar to sort of find its feet and move up a little bit. And as it does that, I will expect sort of Aussie to break these supports down here. So these are the levels that we've looked for. 1, 2, and this is the third one, the main one here. We had reactions from these levels every single time. Okay, obviously this one was over there, but the point is it's this horizontal, this is the price. And the reactions are massive and they keep taking out highs and highs, all this kind of sort of stuff with it all. But I do feel that potentially, it's had so many attempts to break out. You know what I mean? It had the range through here, had its big breakout effort, failed. Came back out of nowhere. This was off weak US CPI. And came right up here, right back up to 65 and slapped on the nose again. It's had so many attempts. Really, it's just back into this range. I mean, if you can see sort of like realistically, that's your range there, and it's just back inside it now. So I think sort of like, there is that last line of defense, which is sort of, there's 63.20. I think underneath these 63.20s, you've got to finally give itself up. But, it's not going down easily. And this is the thing because, US dollar just keeps underperforming. Like every time it looks like it's about to break up higher, they find a reason to sort of sell it down a little bit more. But, it does look like it's moving up. This is the bigger driver for us all. The one's just not doing anything. It really is. It's just sideways. And RBA, these are very sort of either just up, sideways, or down. It's reduced the amount of its ideas with cuts. So that was another thing, actually, sort of in terms of Aussie, the data yesterday. We had the employment data.
just quickly flick back onto this because this, as I said, it's almost this is like a running joke. And I said this yesterday. Actually, I say it every month. I put a post on X every month. I just link the last month. Um, but these guys are just like pretty much like spam 20s every month and that. If you look even more at that, how much they just think, like, honestly, they just it's sort of like, what do you reckon? 20, 25, what do they say? What have we got? 25, 28 million or something here. So, a bit under 1%, give or take a few. Last couple of months, they've sort of branched out a little bit more. They said, oh, look, it's gone up to 30. It was negative 50. But they've obviously gone, look, we can't get this right. Let's just go back, shoot down the line. Let's go 20,000. And it comes in at 89. So that's just absolutely ridiculous. But onto the Aussie chart. You can see even with that news yesterday, markets got a little bit all happy for 2 seconds and then really just sold back into it. And I think this is important because this is the same thing that we had over here as well, where you've got sort of seemingly market positive um, data coming out, moves up, but the market uses it as a sell opportunity. I think you need to pay attention to this. And there's a thing that I always look at with these things, and I call it the data drop point. And so the data drop point is literally the point in which the price in which the market was at when the data came out, which is this point just here, this candle. Pretty much that candle. Yeah. And shot up, came back down, and then sort of broke through it. Yeah, it flared back up here for a second and then up to 40. But the point is, if you've got market positive data and it breaks up and then it takes out the data drop point, I think this is a great reversal, and you can always sort of see this stuff with like NFP, CPIs, and that these kind of larger bits of data which impact the market. I mean, this jumped 20 points in a couple of seconds, and then the market said, "Look, even despite that kind of stuff, the strong data, we're still going to sell into it." I think once you take out that data drop point, that's a great signal that we're going to go down a little bit lower. I'll find some more examples of this, but that's just something that I've always sort of noticed with the news. Um, if we have a look at what's actually happening here at the moment, we got typical sort of bounce in the 90s areas. 90s always seem to show up as a little bit of an area for Aussie. I would say that's probably your top end, back up above 25. I think if you want to try and buy Aussie, you have a little bit more confidence above 25. 64.25, 64.30 above this zone here. We can see that obviously, market was trying to hold it, trying to hold it. They've become sellers, they became sellers. This is the area you want to recapture. If you want to get on the long side of Aussie, you need up here, here, and then up here. But to me, I feel that this is probably, as I said, going probably a little bit lower once the market can find its feet with the US dollar a little bit here. But I think for the time being, it's really just this sideways flat chop, and this is what we've seen a lot of through Asia this week. This was like a Tuesday or something, and it just did nothing. And then obviously through the US sessions, we're seeing the things move a little bit more. But this is Asia. Actually, hold on, mate. We took off a little bit here, but it has been a lot of this consolidation, 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 then faster moves. So I think this is very much just going to be consolidation, and then we move down here. I think we're looking at a test of 63.60s. Should we get a close under 90, call it 90, just to be on the safe side of it all. But to me, it seems like a little bit of a box down here, a little bit of a, whoops, just a tiny little tight consolidation area. Call it a little breakout box. And then that's the move that I'm kind of looking for. Moving down here. I mean, we could see it sort of move back up, but I think it's pretty much more in the camp of it sort of selling up. Like DXY looks like it's very much trying to hold that little zone at the moment. Gold's coming off a bit now. So gold's back down to 23 from 51 high. And that's what we were saying. We want to see what happens with 3,200 and the buyers that seem may turn up at that level or may not. If they don't turn up there, well, might be a little bit in trouble. But we'll see how that goes. But yes, here we are for Aussie. So I think sort of look, wouldn't look for any sort of buys up above until you're up above 64.30. I think this is more just a little consolidation sit here before we sort of move back down. Look at the tests at sort of 63.60 underneath there. These are the three levels that I've been looking at, and we've seen strong reactions each time. I don't think maybe the reaction here is going to be as insane as some of these ones have been, but I think it's going to be a crucial level for market to hold. And I think sort of if we sort of see US dollar DXY break out, that's about the same time we're going to see the market broadly be buying US dollar against everything they can, and Aussie is going to be super susceptible to that. And that's what's going to give us a major sort of breakdown. We'll fly along. We've got copper, and copper, another one that is really just not doing anything. It's just sideways. It's found itself like it's a little range inside a it's a range inside a range. This is where you're looking at the moment. Um, yeah, look, same sort of thing with the silver, but it's a little bit tighter here. I still think, above 480, below 450, that's what's going to give you a direction. Not really too much to say about sort of copper at the moment. If this does break down, it's another tick in the camp of weak weak Aussie dollar as well. And finally with China, and again, same sort of deal, just not doing anything. It's just, I mean, look, it never really does a great deal. For the most part, it just grinds. And then you'll see some movement, and then grind again. So it's found itself a little, even tighter little area down the bottom here, but it's been unable to sort of get that big breakdown. This was a big support area. It looked like it wanted to go, It's even had another attempt, actually tested out the bottom buyers. Boom. So this is obviously just very much where the buyers are sitting. You need to get your close down underneath 718, 718.5 to sort of see any sort of further move down. But again, like I've said the last couple of days, I think US dollar buying, I expect probably to have a little bit of a flurry, which will sort of get this to move up a little bit, which will probably put a little bit of pressure on gold and pressure on Aussie as well. All right, that's it from me.